Hi everyone. Today markets went straight up all session, absolutely massive. During the move here, you can see straight up after a slight gap down, pushed through the level, retest continuation. Broke 603, headed towards the trend here at 605.30. But let's take a look at some of these charts and see if we can find some direction for tomorrow.
Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started.
I want to try something different here, so let's get straight into the charts and then we'll go ahead and throw the data in at the end right before my accounts. Let me know if you like that setup, but for now let's stick with it and see how it goes. So we got the charts here today straight up about 0.4%, broke those levels like we talked about, retested the one here, 599, touched that level, bounced, momentum bullish. RSI kind of mixed here, we're still not above the SMA, waiting to see if we can get a little bit higher. Got this major trend resistance in there, we've been talking about that for a long time. Broke through it a few times here, ended up back below it. We're about to retest it, and we're also getting into that key level 607 here is potentially in play for tomorrow. If we reject from there again, that's going to be a fourth touch of that level. You got one here, two, three, fourth touch. If it rejects again, that's going to be a pretty solid line in the sand for me, watching that zone very, very closely. It's only 0.5% from here. My expectation is we touch that at least tomorrow, and then it'll be interesting to see what happens with the unemployment data. Do we touch this level, take out all the stops, and then bad unemployment data sends markets lower? That would be an interesting catalyst, but we're in the key zone here, and my guess is we're probably going to hover in this area as we head into the major data on Friday. And then looking at that hourly chart here for a second, like I mentioned, gap down through the level, but then rallied right back up through it, right to that trend, 607 in play. Momentum, definitely bullish going into the end of the session. It's tapering just a little bit here, but we're almost overbought at a 67.96. It's been about 3 days of rally on the RSI, and now we're almost overbought in that key zone. So everything says we're getting a little extended short term as we hit those major zones of resistance. And then looking at those tasty charts just for a second, you can see that upper ATR band was the target. We got very, very close to it. Right now it is sitting at 605.47, so just about $1 off of it, a little bit less than $1 with the after hours price action. My guess again is that we get there. We'll see if we find resistance. We've been kind of chopping slightly higher over time here, but we're getting close to those key resistance areas. Overall, this is still sideways choppy to me. We see really strong moves higher, followed by strong moves lower, strong move higher again, strong move lower again. Now we're at the peak. Is it going to be another peak here? And then we're going to roll back down to these zones here around 590. Certainly a possibility. It's going to be interesting to see how it plays out in this key zone. Then looking at the NASDAQ, similar thesis to the SPY charts, up about 0.5% after the dip down rally through. Got just above 526.50. That was the level we were looking for. It was a little choppy just for a little bit on that mid session. You can see it here, 3 sideways candles on the hourly, so 3 hours of just sideways movement throwing wicks. And then the last hour of the day, we pushed through that level. We're right at these trends here. You can see right at that trend structure. Let's go ahead and extend that out for tomorrow. That trend is going to be 527.60, which is pretty much right where we are now, just a few cents off of there. Is that going to be key resistance? It definitely seems like it. Again, same as the SPY, sideways choppy. We got into this price range back here mid-December, and we are still here as we head into mid-February. So that's the play. Looking for sideways choppy markets. Are we going to rally through to 530? Touch that zone and then reject from there again? Or are we going to push maybe a little bit higher here, 533, touch that area, and then we got the big double top, big continuation lower into the 503 area. That's pretty much as wide as it goes, 503 to 533. Here we came to 509, looking to see if we get back to 530, 533 potentially. Either way, though, I'm expecting a rejection in this zone at some point, and the last couple moves to the downside have been quite dramatic. Looking at these tasty charts, very similar thesis to the SPY. We're headed towards that upper band, which is right now at 528.50, which is about $1.70 higher from current price. We're at 527.20 or so after hours. Not a ton of volume, very little, especially in that sideways choppy action. Then the last candle, pretty bullish here, still well above the 8 EMA. That's at 526.19, which is pretty much where we finished on the session before getting that rally through after hours. Overall, still looks bullish. ATR trailing stop, still bullish. 523.28 is the level. As long as you stay above that, we're in bullish conditions. If it pushes through there, your lower band target is going to be 518.78. Moving over to the Russell and the Dow, these had a very different thesis here. The Russell was up about 1% and continues to look very strong after hours, about 50 cents, headed towards 232.09. In my opinion, we're above that 55 EMA, which has been your resistance here. Momentum bullish, RSI bullish. Looks very, very good on the Russell. Probably should get a little bit bigger position there. We'll see how it goes. But this has been really, really strong off these 3 days of push here. And then looking at the Dow, strong day there as well, 0.7, looking to get to all-time highs. Very, very close to it. And I would guess we'll push through that tomorrow. So Dow looking very, very strong. NASDAQ and SPY looking okay. Moving over to the Mag 7 just for a moment, you can see it was actually down 1.16%. Again, we are seeing the Mag 7, the market leaders, not leading markets higher. Markets were very, very strong generally today, as we just talked about, but the Mag 7 was negative. It's been flat here since pretty much the same time as markets, mid-December, because this typically leads markets. But for now, we're seeing Mag 7 weakness, and the rest of markets seem to be doing better, which is probably why we're seeing the Dow do so much better than the NASDAQ or the SPY. Moving over to Apple and Microsoft. Apple finished relatively unchanged, just down 33 cents, right below that 21 EMA. We said that was going to be a tough zone. We didn't even test it. We couldn't quite get to it. Momentum slightly bullish, RSI still slightly bullish. It's still holding in there. And then look at Microsoft here, still cannot get above that level. So 413.36 is the level. We closed at 413.29. Still can't get above it. If it's going to do it, it'll probably do it tomorrow. Maybe we see a push into the 426, 427 area in this consolidation of EMAs and SMAs. But if it rejects from here again, then I think 394 is in play. So interesting zone, very important zone here for Microsoft. Moving over to Tesla and NVIDIA. Tesla was down 3.5%, broke the level here, 384.29. We closed below it, so that's another close. We did it back here. We were here a little bit on the 3rd of February, but really back here Thursday, the 2nd of January. This looks a lot worse now. If we get the continuation break of 369.33, then I think we're going to have a much, much lower lows to come. It's been a lot of bad press about Tesla, car sales not doing so great, but we'll see how it goes. Looks bad here. And then NVIDIA, you can see, had a really good day, 5.2% right to the level for 124.69. If it can continue through there, 130.35 is the zone in here. You got trend resistance just above that, 131.50. Momentum stepping to bullish, RSI stepping to bullish. I think there's probably a little bit more room here, but again, I just don't expect this to be a sustained rally. This is a low, lower low with a high, lower high. I would expect a lower high here, and then I would expect a lower low here somewhere around 106. This just looks like a really long consolidation. We're now testing that 200 on the daily chart. Slowly but surely, this structure is looking weaker and weaker. Moving over to Amazon and Alphabet, you can see both of these were down a little bit, 2.4 and 6.9% respectively. Amazon selling momentum, selling RSI breaking down ahead of their earnings. I think this is probably going to go a little lower. Support is 233, realistically probably 230. VWAP 21 EMA, you got some trend support in here. Let's go ahead and extend that out there. Somewhere in there, trend support to 28.40. Either way, I would expect this to sell a little bit more ahead of earnings. We'll see what happens after earnings. And then looking at Google, obviously sold with their terrible earnings, didn't regain any of that movement. We're back into the middle of the range, resistance 193.31, and we closed below that by 1 penny. So right now, at a key resistance, looking for a little bit lower lows. 55 EMA didn't quite get tested, but I would suspect that that will get tested at some point. Moving over to staples and discretionaries, you got some risk off movement here. So staples was a gainer on the day, 0.62 on the day, back above 78.88. Right at 79.11, looking strong there, headed towards 79.90. And then looking at discretionary, sold here 1.13%, back into the range here, 227.80. Momentum bearish, RSI bearish for discretionaries. I think this is probably going to go a little lower, fits with the Amazon lower thesis. Tesla also selling off, probably going to head to that 226, like I said. If this zone breaks, again, this looks like one of those kind of long consolidations. We got the 55 catching up, got a test, second test here. If we get a third test and these start to break through, there is a ton of room of downside potential here. Very long consolidation, and it's just not going higher. You got a clear high, lower high here. Didn't even touch the trend after retesting it here. Everything for me says this should be going lower. Moving over to transports and real estate. Transports had a negative day, 1% off of the really strong day the previous. Sold back to support 69.29, so technically still bullish here, holding the support level. If it breaks through there, 76.88 is the next one. Momentum bearish, RSI bearish, so we'll see how that goes. You still have a high, lower high here with a low, higher low here, waiting to see what happens. Probably going to push to that 200 sitting there at 76.72. And then you got real estate having an extremely strong day, 1.57%. Getting to the top of that buy range that I said, 40 to 42 was really the range. Really anything below 42 is what I was talking about as a buy area. And as we head higher into this 42 to 45 range, I think that's just a little bit expensive when it comes to these yielding assets. So opportunity here. Maybe it rejects off the 55 and we pull back into the 40 to 41 area back in here. You get a little bit more opportunity, but momentum bullish, RSI bullish. It looks like real estate is set to go a little bit higher here over the next day or two. And I still like it. Like I said, anywhere below 42 is an interesting opportunity for me. Moving over to breadth. Breadth continues to hold up really well. Not super surprising considering how strong markets look today, but we had that huge dip down, got no follow through on that, and then recovered here. Seems like we're headed back into this range here. Probably going to get a lower high setup, but for now, everything looks still pretty strong. 50-day testing the level, 52.81. Rejected from there. I want to see it push through there. If it does, we're in good shape. If it rejects from there tomorrow, that's going to be very concerning. So overall, definitely some opportunity to go higher, but watching those key levels here on both of these. Moving over to yields for a second here, I just wanted to highlight that this is sold off pretty aggressively here for 2 days. 10-year selling off even more. Seems like the 2-year is probably going to head to that 4 level. We said this was kind of the zone we were looking for. We started to see sells at the 200. We talked about it back here. It's continued to sell slowly with lower highs and lower lows. Either way, it looks like this is headed to probably that 4.07 to maybe 4.1 area in here. And then looking at the 10-year, look at that big sell down 2%, headed towards that 4.35 area. Very bearish, RSI bearish. Probably going to be a higher low, but still looking for a little bit more weakness. And as long as this continues to look weaker here, that should be strong for equities, especially real estate. Makes sense why real estate had such a strong day. Moving over to the dollar looked pretty weak again here. 2 pretty big bearish days in a row, and now for the Thursday, slightly bearish on the open as well. Not a lot, but a little, and you can see slight retracement, 21 EMA on the hourly, watching to see if it can hold above that or not. Momentum bullish, but seems to be fading slightly. You might have a low, higher low forming potentially. Maybe we push back to 108, but if we did, I would expect a rejection, and then you can see that very long consolidation waiting for this 55 to come into alignment with the rest of the EMAs there. Tested it, third touch now, waiting to see if we get that third touch breakthrough, and it does seem like that is going to happen. So we closed below it. We're continuing a little bit lower here into the Thursday. Dollar weakness, yield weakness. We should see equities showing a little bit of strength over the next day or two still. Bonds going higher as you would expect. You got bonds going up about a quarter on JNK, 1.65% here on TLT. Massive jump. We said the bottom was in here. Higher low setup here, 21 touch. Consolidation and the breakout here now. So we're back above 89.16, probably headed to 92.82. Big move here. We're testing the lows back here from mid-November. Think it's going to go. We already had the retest. I think we're going much higher here on bonds. Again, the opportunity's still there a little bit, but this is starting to get into those ranges where you can see rejection just a little bit above the level. We sold off a lot, but I would still think short term we're probably headed here, which is about 3 to maybe 4% higher. Moving over to volatility. Volatility sold pretty aggressive as you would expect, down 8.26%. We broke the trend. We talked about it. If it went through, markets were going higher, and we did. I think we're headed down to the 4.7. Then we'll see what happens there. Momentum bearish, RSI breaking you back below everything. So volatility coming out of markets. Seems like we're getting a little bit more strength tomorrow. And then circling back here to fear and greed, we actually stepped up to a 40 from a 38. You can see still fear on momentum despite markets rallying. Still extreme fear on strength. Has not moved really at all. Slight step higher on breadth. We talked about that. Put call ratio still kind of hovering. Pulled back slightly. Nothing crazy there. Volatility breaking down like we talked about. Safe haven demand. Slight step up, but still in fear, and then greed on junk bonds. Bonds continuing to look quite strong there, in my opinion. Quick reminder for seasonality. Remember the first part of February, really nice. So far, that has been true. Up through the 7th, the high of the month on election years, post-election years, is that 10th here, you can see about 2% higher for the Russell, and then we start to see kind of downtrending into the end of the month where it turns back to negative, down about 1, even lower for the NASDAQ, around 3% lower. So right now, slightly bullish. We are getting that. Are we going to get this sell into the end of the month remains to be seen, but keep in mind this is potentially the end of February scenario. Moving over to earnings just for a second, Disney beat on the bottom line, met on the top, okay there. Qualcomm beating on both, you like to see that. MicroStrategy, pretty terrible there, wonder what they did on the charts. Overall, quite a bit of green, a little bit more choppy here than typical, but overall quite a bit of green, especially from those that you really wanted to see it. Qualcomm being on that list, and then you got tomorrow, Amazon after hours, Eli Lilly in the morning could be interesting. Philip Morris, Honeywell, ConocoPhillips, want to see how they're doing. Oil and gas companies have been on a bit of a down move, want to see them kind of snap that off if possible. And that'll pretty much round it out for the week and most of earnings. Economic data here, you can see ADP non-farms, really good beat there, way better than I expected. And the previous number was revised up, so everything looking good on the jobs market. After that week, JOLTS report, economic data also good, well above the 50 line on all of that. Even if it was below expectations, still above the 50 line, so growth. Fed GDP now for Q1, a little bit worse than expectations. It's still a ways out for that official call, but still pretty good, honestly, at a 2.9. As long as we continue to roll at that, that's going to be good. Thursday, not a whole lot. Initial jobless claims, continuing jobless claims, just like every week. Want to see those do well. Fed balance sheet continues to roll off. We'll see how much that is this week. And then you got the Friday data with the unemployment rate. That's obviously going to push around markets, and I'm super curious to see if we get a step back towards that 4.2. If we do, that's going to be terrible. And I don't think it's impossible. I actually kind of feel like we might step up to 4.2, and I think markets might have a pretty negative reaction to that. So we'll see. Definitely going to be interesting. And then moving over to Max Payne, you can see pretty bearish across the board here, about 0.5% for the end of the week. We'll see how that plays out as we head into that economic data, the unemployment data on Friday. Moving over to my accounts, I had a really good day. I rolled up and out pretty aggressively, tried to take advantage of all of the up moves throughout the session, and I think I did okay. Pretty much in line with markets, $2.38. I think I captured just about all of that to the upside, so really strong there. And then Russell, same thesis, $2.51, caught all of that. So $2.28 now for $2.64 credit for the Friday session. That is up a little bit after hours, about 40 cents. We'll see. My max profit there now is $2.30.64, so we're not quite there for the Friday. I'm a little concerned we might rally up and see selling into Friday, so I'm a little hesitant to go past Friday for now, but we'll see. And then for the Qs, $5.26 for $4. $5.30 is the max profit, and we are pretty much at my in the money level, just past it, $5.27.14 after hours. So still a decent amount of upside potential for the Friday. I'm not at my max profit, or at least not as close to it as I am on the Russell. Either way, though, looking for some bullish moves, but still want a little protection for that Friday session in case the unemployment data does not go super well. So overall, bullish for tomorrow. Let me know down in the comment section what you think of the charts. What do you think of the new format? I'm not necessarily going to do it every time, but let me know what you think about it. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.